Financial emergencies are unfortunately a fact of life for many Americans today, and this is almost certain given that nearly every single American has reported that they've had some sort of financial or health crisis in their life, meaning that they've had to dig deep into their accounts in order to scrape together enough money to be able to afford whatever immediate circumstance is going on in their life. And the most detrimental effects of having to dig into these accounts is the effects that it's going to have over a multiple year period, meaning that you're not only going to be hurting yourself right now, but you're also going to have significant difficulties in the future, having to replenish those savings accounts, plus dealing with all of the credit challenges that are usually associated with these emergencies. And this is especially detrimental to those of you who do not have any sort of job whatsoever, meaning that you most certainly have had to take out a loan in order to cover whatever expenses that you've had. However, if that is the case, then you are also aware of just how difficult it is to get a loan if you do not have a job. So today I'm trying to help you out a little bit because I know you're probably going through some sort of really detrimental emergency and you absolutely need that cash right now. So today I'm going to be breaking down the easiest way to get a loan and how to get approved even if you have no job and or a poor credit score. So the first challenge that you're going to be presented with is trying to find a loan in the first place, as without a job, you have almost zero chance of getting approved for any of those traditional loans from a lot of well-known institutions such as Wells Fargo or Bank of America. And in all honesty, you can't really blame them because if you don't have a job, then you're most likely don't have any source of income. So why would a company want to lend you out money if there's basically no way that they can guarantee that you have the funds or will have the funds in the future to be able to repay whatever money they are lending out? And it's for this very reason that people who have stable jobs, no matter what their income, are statistically way more likely to be able to get approved for their loan. So in order to circumvent this problem, we are going to have to get a bit creative so you can demonstrate to the banks that you actually are going to be able to repay that loan. Now, fortunately, some lenders do also take into account other forms of credit and personal circumstances, and these can help offset some of the effects of being without work. So up on the screen now is a list of some other incomes that may help you qualify for a loan. So these types of income streams do demonstrate that you have a stable income and that you may be able to pay off your loan in the future. So even though you might not have an official full-time job, credit lenders are going to be more likely to ignore that as long as you can demonstrate that you have cash and income coming in one of these ways. Now, in all honesty, there is a lot of research that goes into this, but fortunately, I have also helped streamline that process. You can check out my video with the link up in the corner, and that should take you to some of the easiest loans that you can get qualified, even if you have poor or low credit. So if you're looking for some more information about the lenders that might be most beneficial to you, then this is definitely a video that you should check out. Now, the other critical aspect about getting approved for these loans is your credit score, of course. So the benefits of a good credit score in this scenario is that you're able to offset the effects of not currently having a job, because the lender is going to be more confident in the fact that you've been able to pay off past debts, meaning that you are more likely in the future. So if you are sitting there with a good credit score, then just right off the bat, you are going to be in better circumstances to get approved from most lenders. However, if you are unemployed and you do have a bad credit score, then don't worry because I still have some options out there for you and a few unique strategies that may help you get approved for the type of loan that you need. But in no way is this still going to make it easy to get one of these personal loans, as you are still going to have to do some heavy research, and you are also going to need to make sure you are very careful on the story that you are telling to these accreditors. And as I'm sure you already know, having a poor credit score does unfortunately affect wide aspects of your life. So it's going to make it more difficult to not only get these loans, but also open up new lines of credit or get approved for new credit cards or other types of loans such as a mortgage. Now, in order to understand why lenders are not going to be interested in these bad credit scores is that you have to have some understanding of what actually constitutes a bad credit score. So in the United States, there are three major lenders that basically determine what your creditworthiness is, and these are going to be the central figures in your loan journey, as they are basically dictating how likely lenders are going to be to give you out a loan, as well as the rates and payoff plans that you are going to be given by the lender. Now, if your credit score is on the verge of an acceptable level, there are a few applications that actually allow you to boost your credit score with only a few minutes or within a few short weeks. I actually have one of those down linked in the description. So if you're interested in potentially being able to boost your score to meet these minimum loan requirement limits, then you may also want to check out those links below. However, if your credit score is still too far below that limit, then don't worry because I do have some options out there for you that are a little bit more unique. However, I must admit that these are definitely not the most preferable types of loans that you can get, and sometimes the lenders can rip you off with really high APRs or very strict repayment plans. So this is something to definitely take into consideration when you're looking at these more unique type of loans. Now, the first one of these is going to be a more traditional title loan, which is fortunately a secured loan. However, there are some pretty high costs associated with it. And as the name implies, you are going to have to put down the title of your car or vehicle as collateral for the amount of loan that you are going to be taking out. And how this works is that you're going to take your vehicle to the lender and they are going to inspect it and go through all the details such as the model year, its market value, as well as its condition features, and of course your creditworthiness and history. And this is going to allow them to determine how much they are going to give you as a loan. And if you do unfortunately fail to pay off that loan, then they do have the rights to your car and are going to take it from you. And for this reason, this is why these title loans are one of the most high risk out there, as you could potentially lose one of your most important assets, which is your vehicle. And this is something that can affect you for the long term as well, as in order to get a job, most people are likely going to require some sort of transportation. So if your car does get taken, then you have a lot less chances of being able to get a stable job in the first place, meaning that your loan might even become more difficult to pay off in the future. Now, another option is the payday loan, which is an unsecured form of credit. And the key benefit of these types of loans is, unlike the title loan, you don't have to put up any form of collateral in order to get access to your money. Instead, these systems are entirely predicated on your promise to be able to pay back that loan money. But however, since this whole transaction is basically predicated on a promise, it may be more difficult for you to get a lender that is able to give you one of these loans, especially if you want it at a really reasonable rate. It is very easy for these types of loans for them to corner desperate people into charging them super high interest rates, making it almost impossible for them to be able to pay it back. And with that said, you should definitely be cautious of the types of lenders that you are looking for within this sphere, because most of them are going to want to do a credit check or some sort of income check to make sure that you are actually able to pay off this loan. Now, if you do find a lender who is not going to be checking any of this information, you should be ultra skeptical about the hidden fees or some other tricks that they are playing, because those are most definitely the most types of predatory payday loans, and those are something that should be avoided at all costs. However, if you are looking for one of these payday loans, they are pretty easy to find, as you can find them at a lot of storefronts. You can also look them up online. There's a lot of US-based providers that will give you coverage in all 50 states, but make sure that you are looking at a trustworthy and credible lender before actually pulling the trigger on these types of loans. Now, if none of these sound appealing to you, there's always the classic and ultra old school way of getting one of these loans, even if you have really poor credit score and or unemployed, and those would be getting a loan from a pawn shop. This is something that I'm sure most of you are aware of, but may be unsure of how you actually go about acquiring one of these loans. So with the pawn shop loan, you are going to have to put up some form of collateral. However, unlike the title loan, the items that you are able to put up for collateral are a lot more diverse than what you would get with the traditional title loan. And that's because you can bargain off jewelry, cars, vehicles, paintings, or really anything that has some sort of substantial market value in order to obtain your loan. And the whole loan structure is going to work in the same ways that you would get with the other payday loans, in that you're going to be given a set period in which you have to repay it. And if at the end you are able to pay off all of the installments of your loan, then you will get your original item back. However, if you don't get it back, then the pawn shop will be taking that item and selling it. Now, it is important to note that the collateral of whatever you are putting up is not going to be how much you get in a loan. It is actually going to be significantly less than that. And this is also something that varies by pawn shop. So if you do plan on doing this, make sure you go to a few different pawn shops and try to negotiate your way to the best possible deal. The spread on these can be very surprising, and it does change day to day, depending on who is manning the counter and what area the shop is located in. So make sure that you just don't show up to the first store that you see. You want to make sure you're very careful on your homework here in order to maximize the amount of money that you are going to get off of this pawn shop loan. Now, the final type of loan that I have is going to be one of the most untraditional, and is most definitely one that a lot of you haven't heard of, and that is going to be a rollover plan. And this is something that is going to be very common amongst a lot of bad credit lenders. And all this does is it allows you to extend your loan term. So if you are in a crunch and you've already taken out a loan from another place and you are unable to pay it back right now because the emergency, or you're still unemployed, but you need to make these payments, then this is a type of loan that you may want to look into. However, with these, it is important to stress just how careful you have to be when selecting the right lender and the terms and payments for these types of loans. And this is mostly because there's going to be a lot more interest and fees associated with them, as well as it could really mess up the normal cycle that you are used to for paying back your loans. And when you take out one of these rollover loans, you really do have to be confident that you are going to be able to pay it back, because what happens when you sign up for one of these rollovers is that the amount of money that you have to pay back, as well as the interest rate, is going to jump pretty significantly. So if you're already struggling to make the payments on your current loan, then you really need to be careful in considering just how much more you can afford to pay in order to get that extension. Now, this is really a worst case scenario, and this is something that you should not actively be trying to do unless you are absolutely desperate and you do see on the horizon some way that you're going to be able to get either a steady income or get the money back for whatever current debts that you are in. So that's all the strategies and techniques I have to get one of these loans, even if you have poor or no credit. So with that being said, guys, I will see you in the next one.